Tuesday, January 14th, market analysis. Stan Ehrlich, good morning. I usually start out with the stock market indexes, E-mini, and a few others, and go to futures markets and have commentary about other items. Santa Claus Rally, which made 312, I think it was this year. Not much. We've had multiple thousands in past years. The October lows, cycles sometimes, a variety of topics I feel are pertinent and important at that particular point. Today, pretty much standard, except we have a possible top formation, and I say possible, don't jump the gun, that is acting a little weird and doesn't look quite right, but basically is there, but not in all the indexes, some. So I'm skeptical at this particular point, and I started to say and use that word yesterday as to whether it's going to work out correctly or not. Here's the formation. We have a shoulder high, and head and shoulders are my favorite formation. I see them small, medium, and large, frequently, all kinds of charts for many decades. I know them inside and out, etc. So there's the first shoulder high, and that was 1111 last year. Top is always the head of the formation, head and shoulder top, 12.6. Overbought also. Both of them overbought, classic combination. Then the last shoulder high is unusual because there was this rally on December 26th, which shouldn't be there, but really doesn't hurt anything. It just throws the pattern a little bit off balance. You draw the neckline from the lowest low after the first shoulder and before the head of the formation, which is that low right there on November 19th, and the lowest low after the head of the formation, but before the last shoulder high. Now, the question mark is, which one is the last shoulder high? The rally on December 26th or the rally on January 6th? I think I have, definitely decided January 6th because of two features. One, there is a lot of symmetry to these patterns. The amount of time from the first shoulder over to the highest high of the head, which I just marked with a line here, this amount of time is frequently is very similar, and in this case, exactly the same number of days, hours, minutes, and so on and so forth, since the head of the formation to the last shoulder high. Bingo to the exact day. So that's why I'm deciding January 6th was the last shoulder. Now, even if you like, this is the last shoulder here a week or so earlier, there is no real change to the formation. You still have the same neckline. That didn't change. And you still have a test of the neckline yesterday, whether you got a shoulder here or here, it doesn't matter. But it didn't stay below the neckline, which is very unusual. Normally, when you start to break below a neckline, you get a very big down day on heavy volume. It's a classic breakout. You don't go below it, look around, fiddle around, and all of a sudden pop right back up above it, and then also close higher than the previous day's close. Plus the fact that it was bouncing up out of a support area, which normally isn't there. So we got oversold and in a support area, and we have a false downside breakout on a head and shoulder top yesterday. Today, we've got a little bit of upside follow through early, and we're currently trading a little lower on the day, which is a little bothersome. I thought we'd rally and stay up. We might by the end of the day, but it's now testing again this support area and so far bouncing off of it. So I'm not going to be a damn bit surprised if it closes higher, and higher the better, stronger the better, make me happier. But if it closes lower, I'm kind of back into this question as to whether the support's going to end up holding like it so far has. Are we going to break the neckline again, which would be a second start on a bearish breakout to the downside, generating a downside objective, by the way, of 55.40, down into a couple of different support areas down there, which is not disaster, but it's not going to happen in one day. So you're looking at probably a down January. And the old saying is the way January goes, the way the year goes, meaning a down year. These head and shoulder top formations and head and shoulders in general and chart patterns in general create a measurement for the up or downside objective, but they are minimums. So my minimum downside objective is supposedly 55.40-ish, and it could be a lot more than that, which remains to be seen. I can't come to that conclusion whatsoever, and I'm not saying it's going to be. But if we do close below the neckline in a relatively classic fashion, and it probably will be below 57.93 also, meaning below the support area on the same day, then I'm pretty confident we're going to see 55.40-ish, maybe a little bit lower, but not a huge bear market for the year. I'll leave it at that. Now, most of these comments apply in general in some way, shape, or form to the other indexes. We're looking at the 1 minute, 5-minute chart on the E-mini. It's bouncing a little at the moment. I caught a bounce around the same time yesterday with those same kind of comments. And yeah, it led to a little bit of a rally, but it didn't stay that way. Next, we've got the Spider, which is the daddy of the E-mini. So it's almost exactly the same, except remember, E-mini trades 23 hours a day, which makes the chart high and lows different, usually. And the SPY is only from 6:30 to 1 o'clock California time, the standard historical normal trading hours, stock market trading hours. I was a commodity broker 35 or 30 years or so I know commodities. Now, again, a little lower on the day, 2.5 points is not much, but it's close to its lows. It is at the neckline where it could, maybe, usually hold and bounce right back up. We'll see. I think there's a pretty good chance of that. But I feel a little uncomfortable saying it at the low of the day when people think I'm crazy. It's going down. But I've done it too many times, so we'll see. Next chart. Spider, 5-minute, not too much to add. Don't see anything great here. Maybe a little sloppy head and shoulder bottom last 3 days, but that's too small, usually. There's no real good head and shoulder top here in the QQQ. You do have a downward slanting wedge, but that's a bullish pattern. Downward slanting patterns, generally speaking, end up being bullish. And we're, for the third time now, bouncing off so far the bottom of the wedge. And a wedge is very similar to a channel. And both end up being about the same thing and have the same results and so on. So I'm looking for it to hold at support, and it's not quite oversold. That's another factor. I wished it was oversold. I could be a little more confident about the bounce. We're looking at the 5-minute chart on the QQQ. Looks like misleading. It can make new lows, which it might. And we're looking at the NASDAQ daily data. It's also a possible new low close. No head and shoulder pattern, really. Nothing to go on but support and resistance, overbought, oversold, my usual indicators in the RSI signals, which we got a whopping one on that bottom, and we got a damn good one just real close to that bottom. We got the top of the market back here. I should have a circle on that, and I'm going to have to rearrange things a little bit here. Let's grab this one and move it over. It's about the right size, and put it up here and erase the old one. There we go. I think that looks a little bit better. Yep, that's good. So I'll just manipulate these later. It looks bearish, but all bear moves do until they turn, and then it's, for most people, too late. They don't see it as or before it happens. I like to. So far, I think we have a good chance of it hanging in here around 2687-ish, the low of yesterday, a little below, a little above, and starting to make new highs for a few days. Rallying above 21,384 would make me a lot happier. Next, we simply got the 5-minute data on the NASDAQ. And again, more detail doesn't really change the picture for me at this point. Now, the YM Dow Jones, a little bit different story. Look how much lower we've been lately, and we have already made new lows since September. And on a closing basis, and closing below all other previous lows since early September. That is normally not bullish. But we were also oversold, so we got a bounce yesterday and a little bit more earlier today. It's not holding very well. We're basically unchanged. I don't know. I got to see what I want to see. And if I don't find what I'm expecting to find, I'm wrong. And then I got to think about being flipping in the other direction so I'm on track. Get off track. You don't stay that way. You get back on track. Next chart. The Dow, YM, 5-minute. Not much here. A little result on a very fine-tuned resistance on a fine-tuned basis. Next, we got the Russell. Huge major red support area. Got oversold. Tested what could be a neckline. That would be the first shoulder. The head is kind of a double top, but you pick the highest high normally. And the timing would be pretty good, I believe. I haven't measured it yet. I'm going to do it right now. From the high of the first shoulder to the head is that number of days. And if you take that number of days and extend it from the top of the market to the right, you get that date. And wow, we're only 1 day late. So that would be the last shoulder high on January 6th. Erase that measuring line. That's the head of the formation, and that's the first shoulder. What's wrong with this? Usually it's the top of a big bull market. This is the top, maybe, of a flat that popped its head up and then starts to form something bearish. What's right with this? Timing is good. Formation is not bad. The head's a little funny. Pretty much everything else is okay. Neckline downward slanted, slightly normal. Really sharply downward slanted, like we had in gold, for instance, was not normal. And that didn't work. I erased it. Pardon. Now, what's bad about this? We came down to the neckline Friday, closed a little bit below it. I fully expected, like it started out the next trading day, Monday, yesterday, to drop in a new low ground. But it came down and then back up again. Not just to the neckline, but a little bit above it and closed smack dab at it. Now, that's barely okay if we go down today. We didn't. So far today, the low is on the neckline. The high is way above it, and we're trading a little higher on the day. We're supposed to be staying below the neckline, and 100% of today's data is above it, including the current code, of course. That's not supposed to happen, but you do get false breakouts occasionally. So did we get a false breakout yesterday and it's still going to work or not? Tough to say at the moment. Rally high was up against a little resistance in previous lows, a group of them in general. So I'm kind of momentarily between a rock and a hard spot, but I can almost guarantee this will be resolved probably before the end of the week. Next, just the 5-minute data on the Russell. Not bad. We did have an opening gap this morning and a couple of indexes that has now been closed. I think it was the spider and the Qs, but they don't have them anymore on the daily data regular session chart. Okay, now we go to bonds. At the moment, we're down 4 ticks on the day, 6 ticks on the day, close to the low. We have an outside trading range. At the moment, lower by 6. But we're oversold for the last several days, and significantly so, down to what, 14. That is very low. When you get very low on the RSI, you are almost guaranteeing, and I hate to use that word guaranteeing, if I had a stockbroker's license, commodity broker's license, and hedge fund license again, I wouldn't be able to say that legally, but no licenses, so I can imply it. But look at how many times you get down into this range of around 14. So the market tends very, very strongly to bottom out, and usually for a very good rally. I don't see many at the moment. Last time we were down to 14, we're here, and it didn't rally at all, frankly. Down to 14 back here, and it rallied for only a few days. And I'll go back in time a lot more. There's 14. Wow, it didn't even hit 14 for what, the last year and a fraction. We are trying to turn around. I'm going to say that relatively emphatically. I'm not sure those two words go together, but if I was higher than yesterday's close, and this morning I watched it, we have been a few times, it turned green. I had for a short period of time a bullish engulfing ER buy signal. It needs to close above yesterday's close. And then we've got an official signal. Right now, down 7, it's going in the opposite direction. But I also have something else to say about this condition. It's what I have nicknamed a bass-backwards reversal. It's an outside down day in oversold condition. If it were an outside up day in the same condition, I'd scream bloody murder bottom. But I've seen too many of these, and I've seen some relatively recently that worked. Now, when I say worked, I mean it rallied for a few days, somewhat. You can make some money off the trade. But it also works sometimes for weeks and months and longer. Big time reversal. So we still may have, even though it closes lower, a low today. Only time will tell. I can't be very sure about that. And the 10-year notes, almost in the exact same condition, unchanged right this moment, very close to yesterday's low. It needs to make a little bit lower low to be below yesterday's low. Then we have an outside down day, just like bonds, almost the same conditions, very few differences. And we're brewing for a potential broad double bottom. The lows on both bonds and 10-year notes are not too far above or below where we are right now relative to October 23 of 23. Could make for a very broad 14-month, about 14-month potential, not there yet, broad double bottom. Next chart. Crude, unleaded, natural gas, overbought, up against resistance, trying to turn down, first day down, pretty good move down, not getting an outside trading range, so there's no bearish signal here, just starting to turn down. I expect to move down to probably 74.80 and maybe below the line to other price range supports at 73.17-ish. Natural gas, heating oil, similar, but at the moment down very little. And we do have a lower low than yesterday's low. I don't know. I kind of still think the same thing with crude. I think both of them are rolling over and about to pull back down again. I see it's above the trend line. I see all that. I should bring back the markers here for the closings. And it's not happening, so I have a little problem. So anyway, yeah, I think it's about to roll over and head south. Next, natural gas hit the top of a resistance area that I've had there for a long time, still good, dropped below yesterday's low today, and is currently trading a tiny bit higher on the day. I think it's stopping out. I think the overbought touching the top of the resistance level is going to be the highest high. I think this bounce is going to fail and turn into new lows shortly, soon. Maybe today, maybe by the end of the week. And gold, silver, platinum, copper, and then we can go to green. Hit the bearish trend line in overbought conditions, pulled back down yesterday severely, and today made another minor new low. Currently up a little on the day net, but I still think we're in the process of sliding down some more. bottom of the pennant seems an obvious potential. Maybe a little bit higher than that, where there's some support at around 26.34, but a little bit of a dip coming and has already started, in my humble opinion. Next, silver, same situation, but we didn't hit resistance. It just simply got overbought and turned down yesterday significantly. And we are already making new lows for 1, 2, 3, 4, 5 previous days. So this is a new low today for a week. Not oversold, not even close, very neutral, 46. Bouncing a little bit off of the support zone, which I think is going to get broken. And we're going to come down and test the lows around 29 a quarter, 29 a third, the bottom of the support area, and see what happens next. The chart next is platinum, dropping like a rock today. Didn't get overbought, came kind of close, but you know, close doesn't count, but in hand grenade and horseshoes. And I like to add nuclear weapons. But anyway, I think it's going to challenge the lows of the trading range below 920 slightly, and it might break out big time if it starts closing below all of these lows, under 900. We'll see. Don't know for sure. Next, resistance is stopping so far this rally in copper. And all 4 of the last days, plus a couple more, one more, overbought at resistance. Not yet closing lower like yesterday slightly for today's action, but I am looking and expecting and thinking it's likely that it's going to turn down and start closing below 4.27 around yesterday's low. And that'll cause probably more bearish indications and more sellers to come into the market. Next, beans, oil, meal, corn, wheat. Now, beans have made just recently, last couple of days, new highs for a significant amount of time since last early October. So you got most October, November, December, and a little bit of January. You got 3 full months basically of price action that's below where we are. We also have this possible double bottom. The approximate lows were made in August, I'll just say August, and the low was made on December 19th. They're fairly close together price-wise and not too far apart. So this is a pretty wide, legitimate potential head and double bottom formation. I need a close above, and we're getting there pretty quick. Let's call it, 1082. That'll work. Or higher, and maybe a chunk higher on the same day for an obvious upside breakout. Then we're closing above the highest high between the 2 lows, and that is a breakout for a double bottom, which would generate a minimum upside of expectation of 1186. And that could cause a longer term major double bottom, because beans and grains in general have been going down for a long period of time, and they have gotten very inexpensive historically. Okay, soybean oil coming around, doing approximately the same thing. And I'm going to make this measurement again for you, which I have not done yet, from this low here, which is the lowest low, to the lowest low. So that is a shoulder, maybe, and that's the head of the formation, maybe. So let's take this measurement and go from the lowest low to the right, and we have not anywhere near got a low that's about the same point in time. So this is quite a bit lopsided timing-wise. That should have been, and was right on time, the last low, and the price level was also amazingly potentially accurate. So I know I was talking about a last shoulder low here on a potential head and shoulder bottom, but the rally did not persist. Resistance stopped it, and we made another new low. Now that low didn't make a total new low for the trend. It is at a price level which is acceptable, just barely, but acceptable for the price level, not the timing, but the price level for a shoulder low. Now, all of a sudden, everything has gotten very strong these last few days, and we have rallied to new high ground for at least 2 months. The neckline, if you like this story about this being a shoulder, it's late, but the price is a little low, but it's still, it's okay. If that's true, then you've got a neckline right there, slightly upward slanted, and you got a possible upside objective on this broad pattern, starting here, up to the neckline right there, and you take your measuring stick and you go from the breakout, let's say a week or two from now, way up to 61 and a quarter. And I'm going to leave that line on the charts unless it starts to head south too much. Then the pattern's going to get ruined. But this is a possible large head and shoulder bottom. I'll put my little delimiter or lines in, markings, annotations, and probably for tomorrow. Next chart. We've got a major support area and a fairly rare potential triple bottom over a year and a half. Big, big, big potential support area. Holding. And that's about the best I can say on a long-term basis. We didn't get oversold a couple of days ago. We came into support, and it's popping out of it. Not great. We're down just a little bit on the day momentarily. We made a slightly higher high this morning. I'd like to see it close again up above this resistance line, a previous bear trend line, bull trend line, which worked fairly well for a while. Broke it, hit support, got oversold, and actually a little below support, making a new low, which does some damage a little bit to the long-term bullish potential, but not too bad because we rallied a lot right afterwards. So this is a washout and a bear trap, kind of the same thing. And let's see if we can keep rallying. But again, I'm not convinced completely that all these grains have gotten major long-term lows put into place past tense. What have we got for corn? Looking the best of all the grains. Corn has made a new high again today, and for the last 3 days in a row since what? Way back in June, a new high for half of a year. Now that is usually defining a trend 6 months worth, and that would imply bull trend, bull market has started past tense. But we are poking up against some significant trading range back from February, March, April, May, June of that last year. And that, if it stops the market and we're overbought right now, could turn it down completely. So I want to see how this next downside correction, expecting it to come down to 457-ish and maybe a bit lower. It's okay if it comes down to 447, which is the old neckline. Hey, look, today's high is now 3/4 of the way up to my minimum objective that I've been talking about of 494 for weeks. And now it's reached 480. Yeah, almost to the tick. What is today's high? Not that that's important. Yeah, missed by 1 tick. So it's time for a downside dip, minor, hold its support, turn around, make new highs. That's what the head and shoulder bottom says. But I don't have agreement with all the other grains at the same time, which would be great. If everything starts to get stronger faster, now I've got some companionship, so to speak, and some help on the way up. What about wheat? Well, wheat's kind of like meal, near the lows, heading up a little bit the last few days. Certainly not particularly impressive. Yes, we have closed above, stayed above, and climbing a little better above the old major bear trend line. So that's bullish, sort of. We did have one of those bass-backwards reversals at the bottom and oversold. Well, no, that's not true. Sorry about that. We still have an outside down day, and it turns out to be a low. But it's not quite qualifying for my bass-backwards. Okay. New lows for many, many months and multiple years just last Friday. So I cannot be convinced it's bottoming out yet. but there is the slowing of downside momentum. There is the inkling here, the beginnings of something at least sideways, if not turning into something a little bit better than that. So I can't rule out that there's the possibility that since December 20th, including now, all of this activity might be the last major low in the last few weeks for a long time to come, but I can't be sure about that. Okay, cattle. Overbought conditions should have topped it out. A little rally today did not make a higher high. We do not have an outside trading range, but kind of close. And we are still up a little on the day. I still think this is going to drop off even more, but the trend is not necessarily going to change. I think the trend is still up. We just got too strong, too quick. Overbought is the way we described that. And it deserves a correction, which is very normal in a bull market. No pun intended. Bull. Cattle. Next. Hogs. At resistance, climbing above it, staying at the moment like a little bit yesterday above the resistance level, which now turns into support again, which didn't hold starting on December 30th, dropped into that area, got pretty oversold, way down to, there you go again, 14, very low number, causes upside moves, often started it. That was 4 days ago, and we've rallied from an average of about 80 up to 83 and a half. Not a lot, but decent. Okay. I think we could get some more rally out of this. But we're starting to get into a little resistance, a little messy area here where it's topped out so far. Too far to the right for a shoulder, too much of a slanted down neckline for a head and shoulder top. We do have this overbought, maybe, and then this is a head, maybe, but the rest of this is not conforming. Last, we have the stock I've been following, SQ, for now maybe a couple of months plus. It did reach my downside objective, which was 82 and a half, measured by this head and shoulder top. I didn't put the markings in for the shoulder. That's the last shoulder right there. The head is the overbought condition right there, and the first shoulder is right there. Neckline slants up, the usual method. Broke out, big down day, classic breakout, hit support, bounced, came down, new lows, hit support again, bounced a little more than one would expect, but didn't ruin anything, and collapses to my downside objective, plus yesterday a little bit more, down to the bottom of support, call it 80, and we're rallying one day. We almost got down to my 25 oversold level. This is my version of RSI. I learned RSI from Wells Wilder himself. Remember, I was on the international lecture circuit through the late 70s, 80s, and 90s, and later. Hell of a lot of fun. Just great experience. Loved it. A lot of good travel. I think this is turning around, but I just can't be very sure about it at the moment. If you did nibble at the long side and the low 80s yesterday, I would consider for that particular trade moving my stop up to maybe a smaller risk loss, maybe break even, maybe a little bit of a profit depending upon how much you paid. You could have bought the high of the day, then you don't have too much elbow room. But that's my thought. Going back to the E-mini real quick. It looks like we came back up very slightly. Yeah, a little bit of a rally. You guys have a great day and profitable trading to you.